The following presentation is brought to you as a courtesy from Forex Academy. This is part of our service, Live Beginner's Course. If you find it interesting and wish to be updated on new releases, please subscribe to our YouTube channel or join our community at forex.academy and receive all our services for free. Your like is also highly appreciated. Enjoy.
The opposite move in New Zealand US dollar. Well, we know that the New Zealand dollar is weaker than the euro as well as it trades against the dollar. So there's plenty of different trades that we can look to get off here in terms of following this current sentiment or momentum in the market. And again, the best thing that we can do now that we know this information is to look for the best technical setup, the best risk reward setup potentially. So this might be one reason here to actually trade, because we've seen a consistent break and closes below this level. So if we were to trade purely off support and resistance, how could we look to trade this market in terms of defining risk reward? Well, simply use support and resistance. So I'll just zoom out on the price action here. We can see a very strong move to the downside. Where is our next technical level of support and resistance? Let's look at this market in a little more detail. Well, really, it would be the next really consistent higher lows within these market. Potentially, we could observably pick these points here. Potentially, we could pick further points down below in and around this level here. Or as a floor to the market, this would certainly be our floor. So there is a lot of room, as you can see, for this market to go. So what I'll do is just highlight the real consistent areas where this market prefers to settle just by looking at the overall price structure. Of course, we have very significant levels here, and then of course the next one would be in and around here. So if that's the case, this could potentially be our profit target for this market, because we know the New Zealand dollar is very, very weak at the moment. We know that the US dollar is seeing some strength, and this is giving us the total trend trade to the downside, with particular speculation with continued momentum. So again, this is just a result of technical analysis. I'm not involving any fundamental analysis to why the dollar is strong or to why the New Zealand dollar is weak. We're just simply looking at the markets in question and trying to trade based on the information provided to us with the price action. Okay, so let's move on then through some markets here. Again, if we look at the euro, I know we discussed this just there. A very clean break of price action here. So the trade here, of course, if you didn't want to trade the New Zealand dollar against the US dollar, is to buy this market to the upside. So that is, of course, more likely to continue than to just shift and pull back down to the downside. So again, as technical analysts, our job is to increase probability of successful outcome. Now that might be very obvious to say, but that is certainly our job, to increase probability of a successful outcome. So what is likely to be more successful, if we buy this market or sell this market today? Well, just given how the market is trading, we of course can just simply view this price action. So what I'll do is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We've got 10 trading days of bullish price action. So 10 days that the market is trading strongly to the upside. So of course we have a preference to buy this market, and again, it is always a question to at what price you'd like to buy it at, in terms of your own risk reward sentiment, in terms of the technical analysis that you see, of course. So very, very consistent trading opportunities there, just looking at some of these markets. Again, to move on to different asset classes, we looked at some forex pairs there. Let's look at the gold market here. Again, what we can see is something similar in the gold market. And just to use a little observed knowledge of our own, we know that gold is necessarily correlated with a negative correlation to the US dollar, because it's priced and traded, of course, in US dollars across financial markets, and is a factor, in in the underlying value of the dollar and vice versa. So generally what you'd see when gold or the dollar is trading up, you'll see the reverse relationship, gold trading up or down against the dollar. So what we have here, and again, there are various factors I'd like to just comment that gold trades on, market uncertainty. Again, this move is very much the inflation move there, sort of December, January, February time, leading us up to new trading range within this price here. Again, simple price action analysis tells us that we have a rejection 3 times at this level. That's 3 times at this level. So is it likely to trade up and break through this level right now, or is it more likely to break this level and trade to the downside? Again, on a totally technical analysis point of view, we might say, well, we don't know. Let's wait and see. Let's wait and see if we see some closes just below the level. However, as we discuss, again, this is not sort of embroidering too much fundamental analysis. Simply by looking across these pairs, well, we know, as just suggested, we have seen some strength in the dollar with the euro dollar. We've seen some strength in the dollar against the New Zealand dollar and across many other pairs, particularly the US. There's the US dollar against the Canadian loonie. Canadian dollar, we've seen some strength. So we're definitely seeing some strength in the dollar at the moment. Again, we know these markets, the gold market is negatively correlated, meaning it moves in an opposite direction to the dollar. So where is this? Again, if we ask the same question, where is the market more likely to trade to? Well, of course, to the downside if we see continued strength in the dollar, because we have that negative correlation. So the technical setup is there with the the continued rejection of these highs. Then we're seeing some trading to the downside. If we get technical support here, again, this is simply by placing our support and resistance individually ourselves. The traders, of course, to look for price speculation with confirmation to trade the market to the downside. So some very easy analysis that we can do just by looking at the charts in front. And again, just by using a bit of knowledge that we've discussed throughout the beginner's trading course. So most certainly revise these lessons, and that's the point of the education we provide here at Forex Academy to deliver that education in a way that it becomes practical, that you can trade it and effectively trade the markets better. That's of course the objective. Let's look then at the euro Australian dollar here, trading a little differently. What we can actually assess is the market trading up over the long term in a little what we would call price channel. So what we can actually do is look to draw this channel, and I'll just pick it roughly out there as something along these lines. So that's something that we could potentially assess, or we could again delete that if you prefer to draw it yourself. You can use these horizontal lines here just to give us a general rule of thumb to where this market would want to trade to. Again, so what I'll use to describe, actually, because we're at a sort of long-term high in this market over the price action, it might be a very difficult trade to get on the trend. So what would be technically significant for us is if this level actually fails. So we're just simply looking at this price channel. Again, we'll choose the most sort of concurrent price channel here. So generally, the market is said to trade within these levels consistently until there's a failure here. So what would be consistent with us is if the market trades down and actually starts trading, consistently in this period, then more trading to the upside would be more questionable, I would argue. So we would maybe suggest that the market is looking to reverse. Again, that's totally hypothetical, but you'll be judging using your own skills, the price action at this time to potentially look trades to the downside. So one example for this would be, of course, euro strength, given we're trading euro Australian. Euro strength or Australian dollar weakness, of course, a euro weakness or Australian dollar strength to actually suggest that this market will trade to the downside. So again, let's look at the technicalities of the market. Let's use a support and resistance again. yes, let's use some knowledge that we can look across different assets to see whether the euro is strong or the Australian dollar is strong or weak, and we can look to actually break these levels and try and outperform the market here. So some very basic analysis, all relating to price action trading, to trading forex markets, to looking at other markets there to help give you confirmation to the trade, support and resistance, price channels, very basic analysis here. So again, I do believe it was lesson 5, technical analysis 101, where we build upon looking at different levels of support and resistance, different technical indicators. Here we have something which is quite interesting for us as traders. If you recall, we discussed Fibonacci retracements, and they are one of the, I would argue, the best indicators that we can use, because a lot of traders, both as retail traders and professional traders, will be using these indicators, and they're quite consistent across many assets. So here we have the US dollar, Canadian dollar, and just as we look at the price section, we can see there's no technical analysis included at all. Apart from the price section there, we've nothing included. So if you recall, we describe and of course we put into practice Fibonacci retracements as looking at the previous swing high to swing low to trade these markets. So over the long term, we can assess potential trading opportunities as such. They give us levels of support. And again, if you're looking to follow the trend or reject trends, it does provide additional support for that. So what I'm going to do is just follow this market in 2 particular Fibonacci retracements, the 2 most recent Fibonacci trades that we would take just by applying the Fibonacci from swing high to swing low as stated really with Fibonacci structure. It's the way the proper method to using Fibonacci. So I'll just go to insert here. I'll go to Fibonacci retracement, and again we'll use a relative swing low. So the second time we have the ultimate low is this candlestick here, and we drag it to the ultimate swing high, and we place our Fibonacci retracement. Okay, now what does that tell us? What specifically does that tell us? Well, it tells us that we have a trend, and the trend in this example is certainly a bounce in the market. So it was trending to the downside. We have a very strong trend developed over a period of 2 months to the upside. But that was the high of the market, and we've seen the market drift and then effectively trade very strongly with one candlestick to the downside there, closing at this level. So that would suggest, look, we've seen a high at this market, and as it consolidates, we can say, okay, that we can choose that most certainly as our swing high, and that's certainly the case. So again, let's just put into practice the Fibonacci indicator. Well, what we observe is our retracement levels. So the first one from swing high, the first retracement is our 23.6 level. The second level is our 38.2. The third level is our 50% retracement level. And the fourth and final level is our 61.8 retracement. Now, simply put, from the best risk reward ratio on the Fibonacci indicator, it's of course the 61.8 retracement level. Now, why is that the case? Well, because that is how we conclude the Fibonacci retracement numbers and with its level, because these are all looking to actually continue the trend. Okay, so we've seen a trend to the upside. Then, of course, the reason it's called a retracement is because, well, the market's retracing, it's pulling back from the original trend. So at these levels, we're looking for potential buying opportunities.